And that sound now means we are live here on our YouTube channel. It's Tackle Trading's Halftime Report, our daily show where we go through the stock markets one step at a time, top-down analysis style, looking at indexes, looking at charts, talking about the news, economics, fundamentals, commodities, currency markets, pretty much anything that we find important and relevant for that day's trading. Break it all down, give you guys some insights so you can better run your daily routine. Welcome out to Tuesday's show. We've got Coach Emily joining us again here on a Tuesday. Emily, how are you doing today?
I'm doing wonderful. Tim, how are you?
Doing fantastic. The Queen is back, and I believe the Queen has brought some class for the end of the show as well, right? Our new segment, Class That Makes Cash. Is that right?
It always feels like a bath when you come out of Monday's trash.
A nice long cleansing, guy. That's exactly right. Matt, how you doing today on a Tuesday?
That's a funny joke, but a bad joke on a day when the trash is literally killing it today. I knew Mark was going to come in over the top on me. And so I had to okay, trash is actually doing really, really good today.
She's up 9.65%.
There are some upticks on those.
Everybody
there's so many upticks I can't do. Look at those.
Somehow Chico Foss became like the name we all look at for trash because it's just fun to say. Chico Foss.
Chico Foss.
Yeah, but Tim, Mark is actually quite amazing here today, but. You know how I like I'm doing better than and not as good as?
Yeah.
Like I feel like I got a zone here today.
Sure.
Like I feel like I got a really good zone. I am not doing as well as Mark's underbelly and in the tech sector specifically. Like I'm not doing as well as tech is today. Tech discretionary coming off the lows very aggressively. If there was a day we needed a reprieve day, it probably was today. It made last 2 weeks feel a little better. So we got that reprieve day in the NASDAQ, but I am not doing as good as the NASDAQ, but I am definitely doing a little better than old Stitch Fix down 30% here today on an earnings miss. So I'm in the zone, somewhere in that zone, T.
So you're not as good as the 4% rally.
I'm not
in the
as good
NASDAQ
as 4%,
100,
but I'm a lot better than -30.
I like it.
I'm in the zone. I'm somewhere in that zone.
Somewhere
today.
In that massive void. I gotcha. Well, it's going to be hard to be doing as good as the NASDAQ. Obviously, we are coming up off the lows. That's going to be the story of the day. We're going to start with index analysis and whatnot. Before we do that, though, by the way, if you're walking into our channel for the very, very first time, we do this show each and every day that the markets are live. We go live 12:30 p.m. Eastern. Make sure you click subscribe, click that bell, come back and join us. And my veterans, let's have some fun today. Conversation positive, lively in the chat, and hashtag Team Tackle to light that up. Let's get started here, Matt. Obviously, the S&P 500, it's got an interesting pattern up here. We were under pressure. We closed below the 50 last Thursday, a little reprieve day on Friday. Yesterday, we held that 50. We are rallying up 2%, and the strength is in tech. What are you seeing in this chart right here?
Oh, well, again, we're seeing the continuation of the intraday analysis that we saw starting really kind of last Thursday night, double bottom on the intraday on Friday. And like I talked about yesterday when I was going through all the sector rankings and talking about the newsletter and how we kind of saw the market coming into this week, we kept the market ranking right there at 30. Despite the sell-off and the increasing volatility last week. And a lot of that was on the backs, quite frankly, of what we were seeing on the intraday chart on Friday, seeing that double bottom, reclaiming that 3780 level, kissing then, creating a higher low at 3800. You had a lot of increasing support levels. And so it's not surprising to me that in the S&P 500, we're back into these ranges. And no, I don't think you can say today, I mean, it's a really good day. And quite frankly, it's been a really good 3 days. Even yesterday's hesitation I took as a positive, but you're not out of the woodworks yet. Quite frankly, I mean, you're still looking at bearish downtrends in the NASDAQ. You're still in, some degree of correction territory in the NASDAQ and other areas of the market. And quite frankly, you're not out of the woodwork yet from a technical perspective in the broad market here. When you're looking at the S&P 500, yeah, and by the way, I'm loving this price action, but again, you haven't broken out of 3,900. You haven't broken out of 3,960. You haven't reclaimed 3,940. These are fairly important levels for the market to reclaim if we want to truly see another leg. This, again, it's a weird feeling, Tim, because again, everybody should be very happy with what the market has done over the last 3 days, in my opinion, because I don't think there's any more bears out there other than bears that are getting destroyed in GameStop. But in the marketplace, 3 days doesn't make a trend. It really doesn't. We got to see a little bit more. So it's been really good. It's constructive. I like what I'm seeing from a technical perspective on the intraday. This could be a no sell day, which is typically very positive for the marketplace. But again, we have not broken out of this volatility yet. Number one, the S&P is just in this consolidation range right here. Let it do whatever it wants to do. Number two, when you're looking at the NASDAQ specifically, and let's come back to the daily chart where a lot of the bloodbath was in, and I hesitate to call it a bloodbath. That's just, you know, what we were seeing. The bloodbath, it was red on the heat map. Okay, that's a bloodbath. It was red on the heat map. But this is where a lot of the pain was really that the underbilling discretionary. Well, you know, you got to love this price action here, and I love it coming off the lows. Don't get me wrong. Discretionary is actually outpacing the recovery. Look at this last 3 days on discretionary. 200-day moving average actually outperforming tech is discretionary, but again, discretionary got beat up a little bit harder than tech did. It's not surprising that the recovery is a little bit quicker on the percentage as well. But you're not. Let me finish the point on the technicals. You're not back to neutrality though in these areas of the market from a short-term technical perspective. You still are underneath the 165 handle in discretionary, which is your previous pivot from a resistance perspective. When you're looking at the NASDAQ, you're still underneath the 50-day moving average, or the technology sector as a whole. You're still underneath the 50-day moving average, the 20-day moving average, and you're battling at the 9 EMA right now. And you're definitely still underneath the previous pivot at 135. So again, very good, very constructive price action over the last 3 days in the S&P 500 in the broad markets collectively. And what we're seeing here today, after, you know, we're getting the $1.9 trillion passed out of the latest and greatest, you know, CARES Act that's going to save humanity, but we're getting that through the political process. That's almost done with. Now, 1 day doesn't make a trend, 3 days doesn't make a trend, but you gotta like the price action. You gotta like this price action. You could be seeing the lows of this short-term movement be formed right now. We just need to see it be confirmed. But I'm very positive towards the price action we're seeing today in the market. I don't think it's unleashed the Kraken and open up the risk graphs and push the chips into the middle. That is not what I'm saying. It is constructive. We're not out of the woodworks yet, but you got to like the price action.
Marky, what's your read on markets here today? Just adding on
Man, it's the one thing I know, because like I've been obsessing about futures price action for about 10 days now. I got a good night's sleep last night. When I went to check at about 10 o'clock, I saw, and I was surprised at the percentage it was up already at about 10 p.m. Mountain Time last night when I went to bed. I was like, well, I can get a good night's sleep tonight because, I mean, it's been exciting action, right? I like, there's things I like. We go back to the NASDAQ because that's where the action is, right? I don't have a lot of things tied to the NASDAQ right now, but that's definitely where the action has been lately. You have that support level that's formed over the last 4 sessions. And I was looking at that last night and you know, and you had a bounce there towards the end of the trading session, right? Selling off. And then as soon as market hours stopped, it held, you started to see an upward movement and so forth and there. Will you go to the hourly chart now, Matt?
Honestly, I want to stay on this chart just real quick because this is your reversal pattern technically.
It is.
On an intraday perspective. You got multiple tests at support levels. You got multiple tests at resistance levels. You do have one triggering action above 12.7, but you got the more important triggering action above 12.8, and that's where you're at right now. And that's why I say, like, we could be, again, the last 3 days in the S&P really, really healthy. But I'm looking at the last 3-4 days in the NASDAQ, because this is where the pain has been. The S&P is going to be fine if the NASDAQ's fine. Like,
and that's
right?
the thing is, even though I don't have a very much exposure, I mean, I got some different specialty plays that are tied to NASDAQ.
You got a lot of stuff in tied to S&P, and then you got some tied to the underbelly, which is loosely tied to the NASDAQ.
Which is loosely tied to the NASDAQ. And so, that support level, because we haven't had that concrete test multiple times over multiple days. We got that. So we now have a line in the sand on the bottom side, right? All right. So when you're looking at a potential reversal pattern, we got a nice line in the sand. We got a really healthy bounce. Really healthy bounce off it over the last 24 hours. And so now, if you look at this as a range, and we go to the hourly chart now, Matt, real quick. If you look at this as a range, I look at, all right, so what's my reversal levels? What's my reversal? I have my bottom.
12,300 to 12,800, basically.
Yeah, and so we're coming up against a pivot point, and we're coming against that 200 hourly moving average. Now, the 200 hourly moving average doesn't get a lot of action, but it can be a very significant short-term intraday trend indicator. We noticed the last big rally we had on the NASDAQ, and Matt is highlighting that even before I pointed it out, because we've had some big rally days over the last 10, 11 trading sessions. The last big rally stretch we had, ferocious price action up, everything's good, right? Come up to, big run up, come up to that 200, hesitate for a day, and then we have a sell-off again. So I think right now we're at a really pivotal point short term. Not net long term, right? Tech, Apple, all these companies long term.
Can we all say we're not concerned about the U.S. economy and the U.S. stock market over the next 10 years? Can we all just accept that?
This is just trying to guess short-term price.
This is short-term price action, yeah.
Because yes, Apple. I mean, their earnings report. I mean, let's not forget earnings season was solid. Yes, everything's a little stretched valuation-wise, but the earnings were really, really good this last earnings season.
I would put it into the top 5 best earnings seasons I've ever covered.
And so we know long term everything's fine. Even if tech took 6 months off, a year off, and traded sideways, eventually it gets back in the thing. But short term, I mean, we got this rising rates theme, but right now we're on the technicals because you don't know how the market's going to react. The 10-year goes up 0.05 tomorrow. Who knows how the market will react to that? But we do know from technicals, the last time we had a big rally in the NASDAQ, big rally comes up to the 200, fades. So I'm really, and what really has me interested in the 200, because if it was just isolated, it wouldn't be that big a deal. But it is coinciding perfectly with the top end of the horizontal resistance area. And so you're right there, 200 hourly horizontal resistance, which is also coinciding old support acting as new resistance. So you have a lot of technical battle zones that the NASDAQ is rising into right now. It's really going to be interesting how this plays out. How does it play out? I don't know. I do know it's going to be interesting. Again, it's a battle. It's the first day in forever, Tim, I haven't reduced risk. That bounce, I was like, all right, I've done a good job managing my portfolio. Let's see how it goes from here.
It's this technical, the technical analysis we're looking at right now. It's a short time frame, but it reminds me a lot of what I talked about last year on the economy when we were debating. If you remember that 3-month stretch after the pandemic began, we were all debating whether or not this was V-shaped, U-shaped, or W-shaped. And I kind of said, guys, it's like I remember giving the analogy. I said, it's kind of like a technical reversal pattern, guys. W shapes are much easier. U shapes are much easier. V shapes are kind of hard to hit. And when you look at this NASDAQ, kind of this recovery little pivot point here, that's a V-shaped recovery coming off the lows of the intraday analysis. When you were looking at this last Thursday, it was basically, a violation of support right then. And you had that V shape coming right back into the breakout channel. That's not constructive reversal patterns. It's not. These are patterns that get annihilated, like annihilated intraday. When you're looking at this back on that hourly chart, I love this type of constructive, slow, methodical type price action here, where you got multiple tests of key support and resistance levels, thus forming that intraday W formation that you can see here, where you get the testing of support, comes back up into resistance, test support, comes back up into resistance. You have these clear triggering mechanisms now, whereas here you got this V shape and it just feels like you're chasing into the face of the dragon, and you just don't want to do that. And so when you look at this, you see that constructive price action, and then you look at that test of that 200 there. Yeah, that 200 can get it blasted back down, Mark. You're not out of the woodworks here, but you gotta like the constructive nature of the price action on the intraday a hell of a lot more right now in the NASDAQ than you did in any of these recovery, these recovery moments.
And I was so tired, you know, those false days, because you had the big green day after Jerome Powell spoke, and then you had that big green day last week. And this one feels like it could lead to some more stability. Now, once again, you're at a pivotal point. This is not a point to shove the chips into the middle of the table.
Listen, in the last 4 days, we're down big, up big, down big, up big. That's the pattern. So if it's down big tomorrow, nobody be surprised.
Oh, you're not shocked at all.
Okay, that's the pattern. Even the week before, down big, up, down big, up. Like that's. Guys, don't be fooled by just the daily price action. What I'm saying, guys, is that this is the first time in this recovery where the intraday analysis has actually gotten the time necessary to be constructive.
No, and if you can regain this, I mean, here's the thing: if you can regain this, solidify, get above that 200, and now the old resistance of this short-term range acts as new support, and you test it in a holds,
and Mark,
that would
your
be
girlfriend
wonderful.
Your girlfriend here, you know, kissing off the top there, little kiss on the cheek.
It's
all of a sudden, that's kissing on the other cheek, bro.
I know. Listen,
so
you know what? We'll decide whether I'm on the halftime report the rest of the week.
If
we regain that, I'm taking the rest of the week off, and you can all talk about whatever.
Listen. I love when Mark. I love Mark when he's losing money in the last week in the underbelly. I love your mentality. I love your mentality. You're a worse winner than you are a loser. No, you got to show up and scoreboard, bro. Like that's where you're at your finest, Mark Stead, is when you're winning and you're crowing.
No, we regain that level. I'm gonna go look at colors for my Lambo.
Oh, come on now.
Wait a second. Are you gonna drip the barbecue sauce from your
I'm
McRib
getting
in that
fuchsia
Lambo?
pink, fuchsia pink Lambo.
A fuchsia pink Lambo. Queen M, let's bring you in here.
There has to be another car manufacturer not named Lamborghini he's talking about, right?
I don't know.
A Lambo is just another word for Pinto, like Ford Pinto. Like, is that a yellow Ford Pinto? Is that what
we're not out of the woods. We'll see how it gets.
Yeah.
But even if we have a sell-off, Matt and Tim and Emily, even if we have a sell-off, we now have a support level that everybody can see, right? And I don't think you'd have a quick trip down there like you did on Monday, but even if it's 2-3 days, right, you have a support level. I mean, there's a lot of good things that can happen at this point.
Again, technically it's getting constructive. You got to like that. I certainly like that. The bond market contracting, at least the storyline coming down to 1.53 on the 10-year was important on the overnight. I still maintain that storyline is overblown. I do believe that's an overblown storyline that will fade into the rearview mirror. However, it's still a storyline that is being played out, and so that can have an impact here too.
Isn't technical analysis amazing though? Because people out there that don't follow technical
I couldn't
analysis,
imagine looking.
They're like, oh, what's going to happen?
Now.
The 10-year wasn't. Well, we have a battle zone now that makes just so much perfect sense from a technical point, and we can see what happens before we add risk.
What's the futures 10 years at / what is that?
ZN, is it?
Is it
ZT's the 2 year.
No,
I
yeah,
always forget.
ZN.
I don't. Yeah.
You know, look, and what Mark's talking about, that guys, is and I'm just asking Team Tackle a question. How many of you guys have been a little confused in these market conversations that the market is having on the bond market? What I have realized in my career is most people, even if they're not educated, they simply understand the stock market slightly better than the bond market.
Mhm.
Because the bond market, how it gets reported, is like bonds go up, but the price is going down. This is really confusing. They have an inverted relationship. But what Mark's talking about is, if you've been confused over the headlines over the last couple of weeks, what Mark's talking about is now you have this very, easy identified support bounce on the 10-year that's really been the main storyline. And so you can kind of visually see what the market is actually talking about. And to me, again, overreaction Sunday, overreaction Monday, Tuesday, Wednesday, Thursday, and Friday, just not on Saturday. But it's a storyline that is still playing out, so you got to give it the respect it deserves.
Mhm. Well, and I think the speed of the interest rate changed, going from 1.05 or 6 to
gross.
1.56. I mean, that's kind of what they were talking about. But
I whatever.
yeah, I know.
I listen. I'm not the guy you talk to about that in the bond market, because I don't think it's a big deal at all.
Yep.
I don't think it's anything, and I want to be clear. For the 14th consecutive day, I don't believe in this storyline at all. I believe the only thing the bond market is reflecting is the economy reopening up.
Mm-hmm. Yeah, higher yields on the long term. That makes a lot of sense to me as well. By the way, speaking of the economy reopening up, I do want to get your take on financials and energy at some point, but I want to bring Emily in here just on broad market analysis for a minute. Emily, this is a big reprieve day for the NASDAQ. Matt and Mark just laid it out. Wonderful job on the analysis there, guys. But the S&P is looking good as well. I mean, we've got strength across the board in stocks. How are you approaching the market here today?
It always sounds like I'm just repeating myself, but it's the same as usual, and we talked about this last week, and we'll talk about it again this week. Not every day is going to be a green day for you in your portfolio. Not every day is going to be a red day for you in your portfolio. So everything that we went through last week with, just the market, dropping, this week is just another week to just look for new opportunities. If you were swing trading and you got, shaken out, even some position trades got, shaken out last week, but again, you take it off and you just re-up. It's literally, it should get to the point where this stuff just becomes, just regular and normal to you. What happens in a week, what happens in a month is, it is what it is. And you just have to, you just have to keep finding new opportunities. And I'm still in financials, and I'm still in energy. I'm looking at industrials now, but it's looking for those opportunities, and whatever.
You need a tech play, don't you?
I need a tech play, but I can't find one. Give me
one. Okay.
Oh, I got some trash
Emily,
for you, Emily.
No, you stop. This is the queen.
And this is
the queen you're talking about.
I'm talking swing trading. I'm not talking about long-term portfolio.
Dude,
that's just whatever, right?
You're acting like
I'm talking swing trading, position trading. I don't have anything in technology. I don't.
Okay, so can I help him?
Please.
Okay. So the question is, we've been all over the energy, the finance, the industrials, the base material plays. I mean, we've had a lot. Like, if you don't have some exposure there, you haven't listened to Tackle in the last 4 months, like, at all. That's all. We've talked quite a bit about it. But you need a tech play, because now you're like, hey, listen, I got my deer, I got my Caterpillar, Mama got Goldman, I got Goldman. We're good, right? We're good there. So you after this dirty 10% tech sell-off, correction territory. By the way, how many stories are going to be written? Tech officially hits correction. Everybody buy.
Which, by the way,
have those headlines started already?
Yes, it was everywhere.
Oh, good.
Yes, they've already started.
Have the headlines that everybody should be buying here? Have those headlines started yet?
I haven't seen the everybody buy.
Okay, wait. Just give it a couple days.
Give it a couple days.
Yeah, give it a couple days. Okay, now. But before those headlines come, let's see if we can get into this early here. Now, you could always, go to your mainstays like Apple, right? I mean, you got it. And I do think anytime Apple is anywhere near the zone of the 200-day moving average, you better be looking at it if you're not already an investor. That's my opinion. but I think you already have some of Apple here.
I got some
So yeah, I know you already got Apple. I know you're the queen. You got your blue chips, man. You got a blue chip on this finger, this finger, this finger, this finger. Got two on the thumbs. You're rocking and rolling. You're good to go. So let's stay away from that. Let me go to the semiconductors. Do you have a semiconductor right now?
I always have AMD, but
AMD, but you know, having AMD is like an amazing wild dog that you love, but
it's,
every now and then it gets so annoying at the dog park. Let's get you a nice little stable semiconductor that won't
look at
let
that.
you lose any sleep at night. I love, and everybody knows Applied Materials is one of my favorite companies tied to the semiconductor sector. But I love the fact that Applied Materials, let's take a look at the stocks out there. Here's the SOX index violating the 50-day moving average. Here's AMD violating, you know, basically humanity. And here's Applied Materials, right? Holding above its 50 in the buy zone between the 20, the rising 20 and the 50. Consolidation, great fundamental company. Long-term charts look really stable. Trying that double bottom. So you got to apply materials that you can look at, you know, and I'm not going to give you any trash here. I know the quality of individual that I'm dealing with in the Queen. So I'm going to give you Applied Materials here. I like it, fundamentally strong company, and one of the leaders there. Now, a company a lot of people don't remember is Garmin, because they think it died many years ago. It didn't. They evolved and became a great company. Here's old Garmin. Garmin, you guys remember Garmin? You remember getting into the airplane, or not the airplane, but the airport. You had rented your car, and there's this big
Of
old
course.
thing, right? That was Garmin.
Hmm.
Well, Garmin makes these amazing healthcare watches and these smart watches and whatnot. Real bit. They've had a great evolution to their company. Here's Garmin, once again, the entire tech sector getting beat up. And what does it do? It gives you a little bit of a snap back to the 50-day moving average with a real good potential trigger above the 20 SMA right there at 126.5. You also got the previous pivot at 128.5 that you can trigger. So there's Garmin there. And again, I'm like, I could always go to the Microsofts of the world, right? I know who I'm dealing with, right? Microsoft, Apple, blue chip, right? But I'm going to give you a couple stocks that a lot of people don't talk about a lot because they forget and they think companies don't evolve, but companies do evolve and some get better. And so let's take a look at Hewlett Packard. And no, Hewlett Packard is not going to achieve what they achieved in the 90s, but I like the high base here. Okay, I like the high base, pretty clean trigger above 15, little cheap stock play here. Obviously not one of those massively high flyers, right? We're not talking about a stock achieving something that it achieved at its pinnacle. We're talking about a stock that could recover back to that. But I do like the daily chart here. I do like the high base. And if you do get a trigger here, you can easily get into that 17 level on HPE. Let's take a look at Seagate here. Once again, all these are tech components. Seagate technology here didn't even get caught up in the volatility of last week. It said, you guys go throw your fit somewhere else. That's not the pen we're playing in. You got to love the strength in the weakness we've seen in the last 2 weeks. Pretty clean trigger above 76.20. Could take a bath a little bit, could take a couple days to think about things, but you still gotta love the strength in the weakness type argument. Pretty decent trigger there on Seagate. Let's take a look at that weekly chart. Maybe another week to cook here would make it stronger, but you know what? Sometimes it wants to break out. It's going to break out. You know what? Let's dust off Xerox conversation. You know, we had a lot of Xerox conversations last year. Amazingly, we had more Xerox conversations last year than a lot of us. Like, I think I talked about Xerox more than I talked about Taiwan Semiconductor last year. And that's kind of grotesque to even think about. But look, let's dust it off a little bit. You got momentum in trend right here. Not only did Xerox not get caught up in the hoopla of the underbelly, the hoopla of the NASDAQ, it actually price appreciated in that environment. 26 handles a resistance handle. It broke out yesterday. A little bit of a snapback here today. Love it above 26 here. There you got on Xerox. And you know what? Just because I'm sticking to an alphabetical order here because I didn't want to say I love Applied Materials more than anything else. But let's end the day with Zebra here, showing a really pretty decent standard bullish retracement with a bullish Harami with a potential triggering action above the joint 9 and the 20 SMA right there. I like those two. Those are 6 tech plays potentially if you need one, M. I like Applied Materials, position style, investing style, but I like Applied Materials for anything. What do you think?
I'm feeling very nostalgic right now because the last two you just brought up, Xerox and
Xerox.
Zebra, as we would say in Kenya. But my dad had a small office back in Kenya, and we used to do a lot of photocopying and printing and all that stuff. And of course, Xerox was the biggest product in terms of photocopying printer stuff. So that one's looking pretty nice.
Piques your interest.
Logic there, yeah. And then of course, Zebra, you got to go to Kenya, you got to go on a safari and look at the animals.
You and I are going on a safari at some point in our life. Okay, we've already talked about this.
So AMAT, I like it, but I think
I think I need to start changing the way I say zebra.
It's Zebra. It's kind of
Zebra from now on. Tim, you're wrong.
Usually that's the case. I got no problem.
So Em, you're okay. So Zebra, Xerox.
Yep.
Zebra and Xerox, and is Applied like. What has Applied Materials done to you?
I mean, I like it. I had nothing wrong with it, but I'm thinking about home right now. Mom and dad are there, so I gotta go. All
right, I like it. So we got Xerox on the cheap stock play.
Yep.
Okay, and we got.
Please, Mark. It's just a little bit of.
I should have started from Z to A. That's what I should have started from. Mm-hmm. I like it. I like both. What about Mark? Are the ones I went through? Do you agree with that?
Well, I like semiconductors the most in tech. The price action makes sense. Now, semiconductors tied to cyclical reopening. Semiconductors always do better when a robust real economic environment is ahead of you. Now they got caught up. Everything got caught up in tech, right? So the sell-off in semiconductors is just because of how it is tied to tech. I think theme-based. They have a little slight edge for me if you get a pattern.
Mm-hmm. Mm-hmm. Plus, they just fly when they want.
Yeah, and once again, it's like the whole, if the economy is going to reopen and do better and robust and GDP, semiconductors kill it in that environment.
I know. They get the 200.
They get sold off with tech. Once again, you need to see patterns right. And once again, if tech continues to get sold off, they'll get taken down.
Micron above 90.
Micron looks pretty good too. Yeah.
So, there's just opportunity. If you're going to do it in tech, it's definitely in the semiconductor space.
I'm open to semiconductors. Obviously, I like that AMAT setup. I like the Micron setup. So the SOX index is still got some weakness. It's out of the woods yet. I actually like, out of everything you brought up, I like that Garmin flag potential.
The Garmin flag.
Yeah, it's
the Garmin flag. I remember a few years ago when I found Garmin and added it to the 25. Yes, Garmin was the tackle 25, and yes, it kicked ass. But I was shocked, literally, because I didn't look at Garmin for like 5 years. Like literally, I didn't look at it. I thought it, like in my world, it was dead and gone and trash and still trying to get into airport limousines. Like I had no clue. I looked at it and I was like, wow, that's shockingly good fundamentals, shockingly good fundamentals. And Garmin's done nothing to disappoint since. In fact, when I removed Garmin from the tackle 25, it was not due to the company did something bad. The company just went up too much and got outside valuation concern. So
There
I
are
like
good
Garmin.
setups in tech. I mean, this is a good exercise because it does show us there are still good setups in tech. The NASDAQ with that 4% rally, not all setups in tech are looking great, but you can still go out
No,
and use the stock pick
listen,
out there. Yeah.
I went through the entire tech sector today. Those are the picks that were decent technically. The others need more time. And don't get me wrong, it's maybe it's not about needing more time. It's about making a decision on stocks like AMD that are sitting at its 200-day moving average and making a decision whether or not you think that's a good investment at that point. For people that are in AMD, they're like, you better hold you little SOB, right? I mean, so it's a different emotion, but in terms of the technical patterns, because that's all I scanned for today was technical patterns, and I looked at every stock. Those were your technical triggering type patterns in the tech sector. The others need a little bit more time.
Well, and I think it has to be said here across other indexes. It's not like we're moving out or away from the energy, the
Oh
financials. Those were
no,
just
no.
underappreciated for so
Wait a second,
long.
hold on. M needed a tech play. We talked tech. That was all that happened. There was nothing else. We're not adjusting our ranking simply because I was talking to Emily about
That's
tech.
right. That's right. That's exactly right.
I hate the disclaimers in America today. They
I
drive me
drive
absolutely
you up the
crazy.
wall.
Absolutely
All it is,
crazy.
we're feeling a little tech-ish this week. That's all. We're still very much in industrials and financials. We're just feeling a little tech-ish right
We'll
now.
let tech join the party. We've been having a great party. You know, tech come back on and join the party a little bit. We'll bring in a couple of different picks in there. I love it. You know, as I'm looking across the markets here, obviously I do want to keep moving through the different indexes and sectors at some point. Craig had a question in the chat. He's asked it about 2 or 3 times, so I don't want to go past it.
Let's definitely get it.
Back on NQ for 1 second. He's curious. Do you guys think this could be a fake out day like it was last Monday when we had the 1-day rally?
Craig, I do think that's in the back of all of our minds, quite frankly, right? We've seen these with anybody that's been trading in I'm not even going to say back in the day. I'm just saying in the pandemic, you know those shakeout days can happen. There's no doubt about that. I do believe we're talking about a little bit of a different market today than we were last week, though. I think more people are waking up to the nonsensical arguments that are happening in the bond market. I think that storyline is in it, not in the rear view mirror, but we're passing the wreck and we're all kind of focused on it right now. But I also think a week after, you know, we've gotten a little bit more time to reflect after Jay Powell's commentary last week as well. You know, I talked about on the podcast yesterday the certain things that the Fed could have done and why they do these Fed policies and all that jazz. So I think we've had a little bit more time to digest the Fed commentary from last week, a little bit more time to let the political process play out with $1.9 trillion stimulus plan. I think we've given it a little bit more time in the cooker to let kind of the market, you know, handle this information that's coming at us. And I look at it technically saying, well, now that we've had a little bit more time to process this information, the market technically is processing this more constructively. And you see that from a technical perspective. So to me, yes, you do have similarities to what we were seeing last week as well. But I think the collective amount of evidence, the circumstantial evidence, if you will, the collection of it does give you a little bit of a different read on the intraday analysis and how this market is processing positive versus negative news. I think there is a not a substantial difference between the starting of this week and last week, but I do think there are key differences that you could have more confidence coming into this week. Let's say, like, for example, Craig, and I think that's just such a wonderful question. Like, for example, looking at last week, here's last week. Here's basic materials. Here's it this week. I'm more positive on basic materials this week than I am last week because you have broken out and have tested that support channel and are recovering. Are you out of this neutrality woodworks? No, but as you see the market go up, as you see it test support, as you see it break resistance, typically we do get a little bit more confident there. When you're looking at energy here this week, yeah, like I said yesterday, I think there's a lot of the triggering impact, short-term triggering has already happened in the energy space. There are still some pretty decent setups there, though, to trigger that could play catch up. But for the most part, I don't think any one of us would be surprised or shocked or upset if we saw energy consolidate for a week and let the moving averages catch up to it. Like Mark, you're big in energy right now. Would you care if energy consolidated for a week, high base, and let the 9 EMA catch up to it?
No, it's healthy. It's
Yeah,
healthy.
that's very constructive, right? And so I actually like energy, even though I think it's going to consolidate for the rest of the week. Maybe it won't, but maybe that's what I want,
Man, you know
right?
me, I'm a cash flow trader. Would I mind a consolidation pattern on anything,
No,
guy?
I think
No.
Mark might actually buy his first breakout of his life if he gets it. That's how strong that pattern would be. When you're looking at communications this week, you know, you have that one test last
that
week,
is
gets
just it.
beat back down. I'm sorry, this is more constructive price action coming into the breakout than this price action coming into the breakout. I love communications this week more than I did last week because again, you've had a week to process all this information. We've had a week to kind of understand what the market is focusing on, and what did comms do? Nothing. And that is such a beautiful thing that comms didn't get caught up, that it's maintained strength. And so I like that breakout more. You know, we've talked about discretionary, we've talked about technology, staples more constructive this week than last week. Utilities still grotesque, but more constructive this week than last week. Real estate still grotesque, more constructive this week than last week. Healthcare, not out of the woodworks, needs to get above the 50-day moving average. But again, when you're looking at healthcare last week here, saying, oh my God, low base, look at the violation that's going to happen this week. It's like, are we going to V-shape breakout and recover back to the highs? You do have a different perspective. Industrials last week were hesitating into a momentum breakout. This week, you got a high base breakout, and it is time to rock and roll in Deere and Caterpillar and everything else. So finance, same conversation as comms and industrials. So my point is, yes, there are similarities, but sometimes those similarities, simply because you get time in the cooker and for the market to process the information, everything becomes more constructive. Even if those storylines don't change, it's simply because the market has had time to process the information, and many participants in the market have been like, you guys are insane. You think this is a story? This is not a story. Others are going to be chicken little. We'll see who's right over time. But a week in the cooker to process this information, I can tell you for certainty, guys, that my opinion of this right now is a hell of a lot more different than it was last week when we were going through it in the middle of it.
Mm-hmm. Yeah, mine as well. I think you have to, obviously love the price action. And if tech's not going to rally 4% a day, so let's just make sure we're all clear on that. Doesn't have to, though, as long as it's not selling aggressively. These
if there's
other areas,
another disclaimer in the halftime report, I'm punching a wall the rest of the day. Like, come on.
And going back to the NASDAQ.
Disclaimers assume people aren't very intelligent. That's what disclaimers assume.
Emily, go ahead.
NASDAQ real quick, specifically on the NASDAQ, because I think that was the question about, is it a fake out? We've identified clear support zones intraday. So if it is a fake out, you have those support levels for you to, to adjust your positions appropriately. I mean, there isn't really that much to it. Look at those intraday, charts and find your resistance levels, find your support levels. If you decide to take a bite out of tech, do so knowing that you have those clearly identified support levels in the NASDAQ.
Mm-hmm. Mm-hmm. Love it. Love all the analysis here. By the way, you did mention stimulus, Matt. The House is set to vote on that sometime today or tomorrow. That process continues to move itself forward.
It's been amazing that over the last 2 weeks, as it's been debated in the political process, we have not talked about it.
Yeah.
Because it has not had a market impact.
Nope.
It's amazing. I mean, just outside of making sure people are aware of where it's at in the process, right? But it's just like, yeah, this has never been debated. Like, it's been accepted from the very get-go. This was going to get done.
And it looks like it's going to continue to get done. Like, it is going to get done. So
like not a shock in this at all. Not politically, not economically, not a shock. It was it was pretty much cookie cutter process.
Yeah. Yeah. And they're moving that forward. I think they're trying to get it on Biden's desk by the end of the week, actually, and get that thing passed, moving
By the
through.
way, a
So
cookie cutter political process is a completely broken, disastrous process, but it works for them.
it did work for them this time. There's no doubt. Let's run through commodities here, guys. I do want to get, we have a couple of different things planned for the end of the show as well. We got a couple of stocks with earnings, not that many today. Earnings season has definitely wound down at this point in the season and the cycle. But Emily, we had a podcast yesterday where Matt and I drafted these different stocks for our all-star portfolio, and we're going to run through them and see what you think about which portfolio you like better one way or the other. And then I believe you have a couple picks for class that makes cash. It's hard for me to say that after the trash that makes cash on our Monday segment, but let's take a look at commodities here. Obviously crude oil hesitating, gold down at the bottom. Mark, let's bring you in here for the analysis. Gold bouncing off of
where you wondered if gold's price movement was tied to real rates. Well, today's candle should alleviate any doubt. Like algos trade on algorithmic headlines. The real race thing caught up gold. You broke support, exacerbated the situation. Today's candle, well, once again, real rates go down. Let's gold. Eventually, that will separate itself. Eventually, that will separate itself from trading. But yeah, probably not for a few more days.
Mm-hmm. Matt, you've got lines down here at these levels. Obviously, we got old history on gold around the 1680-ish markers and whatnot. You can't call it support yet, but you have to love the candle here today and some of the price action. If you're a long-term gold investor thinking about where's support going to form, how are you reading this price action here today?
Honestly, don't care much about it. It's coming off very, very low points in gold, both fundamentally and short-term technically. I think you're getting a little bit of a bottom-up type momentum read coming off the lows, but I don't think this is a real move in gold.
Mm-hmm. Okay.
Not yet. Not yet.
Right.
Listen, I'm not ready to call the bottom on tech and gold today. That's not what I'm going to do.
It's interesting.
That is not what I'm going to do. You can't do that.
You can be very encouraged, right? But
you also can't be right on both of them. You can't call it bottom on tech and call it bottom on gold simultaneously. No, that's going to shake out over the next few days.
Yeah. It's interesting that the price action happening on the same day for both of those.
Sorry,
that's a
gold and tech aren't going to run together.
Yeah, they don't.
It is funny. It is one of the things that always fascinates me is people's obsession with, I have to call the bottom. I have to call the bottom.
Stochastics literally was an indicator created to literally force people not to call the bottom because of how stupid that is.
Yeah, you got to be patient, disciplined, let it play out. There'll be plenty of opportunities if it is the bottom.
Mm-hmm. Crude oil.
Never tried to tick the bottom, guys. Never.
No.
Never tick the bottom and never tick the top. You're doing a lot of things wrong if you're ticking the bottom.
That's right. Well, even coming off the bottom, you're going to be coming back into falling moving averages. There's a long-term fight where bottoms have to develop. It takes some time. There's no question about it.
Think about the intraday conversation we had on the NASDAQ today.
Mm-hmm.
When you're looking at that from a 1 day, give it a little 4 day, the V shape versus the W shape, which one's more constructive, which one's more lasting? The one that takes time.
Yeah, I agree with that. Crude oil next here. Let's run through commodities, fairly quick and get into some of the stock analysis. There's not much to add to the crude oil besides just a little hesitation up here at the high, still very, very constructive, been a juggernaut for months and months and months and months. Mark, anything you're seeing in that crude oil chart you want to highlight?
Not really, it's just when you have commodities. This is a refresher. You've heard, commodity people have heard me say this a million times. When you have big, massive run-ups in commodities, those are not sustainable for months. You can have a nice short burst, right? But these are huge, massive markets. And so when you have these really, really strong moves, consolidation and pullbacks are the norm. It is the absolute norm. That is what normal price action does. That's all you're experiencing here, right? Mm-hmm. Moving averages rise, get a little consolidation. That's healthy for all energy stocks right now.
A little bit more to analyze in the Bitcoin chart, though. The dollar kind of hesitating after its recent run up. But Bitcoin, Matt, you had kind of laid out an intraday level that you were watching there on the hourly chart over the last several days. And, it was kind of very clear that 53,000 zone was right in play. Got a little breakout developing here, Matt, and really healthy chart on Bitcoin. What's your read here on the crypto market?
Yeah, and I also said that breakout can happen at literally any time, and it decided to happen yesterday, right about what would that be? Trying to do east, about 8 east, 8 eastern was it about last time? Nice little breakout here of those ranges, though. You saw the breakout of 52,000. That's an old resistance here. You said the pivots. Obviously, top range up there would be 53, and that's why I
It
called
broke
the
out
zone.
at the start of the Asian market open.
It was, yeah. It was 8 o'clock Eastern. So
Yeah.
that's the Japanese Open, is 8 o'clock Eastern. So when you're looking at this here, you see that breakout of 52, breakout of 53, and then the consolidation playing defense at 54. Again, I mean, triggers are pretty simple on the daily, on the intraday, which means day trade's pretty decent here on Bitcoin, quite frankly. But you do got a very constructive high base pattern being formed here. You're not out of the woods yet from the daily price action. It's volatile, it's crazy, but you got to love this constructive. Once again, is that the word of the day, Tim? Constructive?
I think so.
I think we're going with constructive is the
Yeah.
word of the day. Look at this constructive price action. And are we assuming constructive always means positive?
It doesn't mean we're moonshotting. No.
Okay, but it is positive,
Positive,
right?
yes.
Okay. So you got to like that constructive price action, again, forming higher lows every day. Intraday levels are strong, and you're breaking 52 by 53. Oh, 58 is probably going to get tested here, but again, it's more of an intraday trading range right now for me on Bitcoin.
And well, it has been constructive and
And
healthy
it
there for a couple of
always
weeks.
is for me. Like these short time frames, but I'm not the holder you are. So
Yeah.
And I do believe holding is the best way to do it.
It's been a great approach for me
Yeah.
personally. Yeah. So I mean,
Yeah.
it's the preferred approach I have for the crypto markets.
It's my number one. I wish I would have just stayed with Tim and not overanalyzed the moment.
We've all
June
done that,
17.
Yeah. We all do it. We all do it at different
Yeah,
times.
but
You know how many
but
stocks
not
I've done?
everybody does it before $18,000 in price movement happens in Bitcoin.
That's true. That's true.
Thanks, Facebook warriors.
Thanks, Facebook.
Thanks, Facebook.
They weren't being very constructive at that time.
They weren't constructive, and I wasn't being very positive.
It's too funny to me. There's nothing going on in the dollar.
You know
I
the
care
backstory.
about. I do. I know exactly what we're talking about.
Will you go to the dollar chart though, real quick?
Yeah.
And I'm not even
Oh,
talking
no.
about taking a break. No, I actually have a
Okay.
question.
All
I
right.
won't leave the thing. I actually have a
Okay.
genuine thing.
Look at you,
All right.
buddy.
So, and I can't. Which of the big banks? J.P. Morgan. J.P. Morgan is like, we're a little bit worried about commodity metals right now if the dollar continues to go up and up and up, right? So, like, that was just a headline I saw today. Dove into it a little bit.
Who said that?
J.P. Morgan.
Why do you listen to J.P. Morgan?
Oh, I read them all, dude.
You shouldn't.
I read them all.
Especially in
Goldman,
commodities.
JP Morgan
JP
Citi.
JP Morgan has not said one truthful word in the commodity market for the previous 10 years. I do not know why you would listen to them now.
Listen, I enjoyed very much reading. I don't listen to them. I read them. There's a difference. JP Morgan, I had the greatest time listening to JP Morgan do everything they could to bash Bitcoin over the last 3 months. And I think they're eventually just going to capitulate.
The dollar's not up in any capacity that would impact what JP Morgan's talking about.
And my question was, at what point would it?
That will not happen this year, nor next year, nor the year after.
That's all I wanted to ask.
That's because you should not listen to JP Morgan. They lie.
Dude, if I'm going to read stock twits for 4 hours a day, I can give JP Morgan 5 minutes.
Not in the commodity market. Listen to and I'm serious. You shouldn't listen to any analyst that comes out of JP Morgan regarding the commodity market.
Unless they're manipulating silver like they did in 2011.
Yeah, like that's it.
But they don't ever tell you that they're doing that.
They don't tell us what they're actually doing with that stuff, spoofing the market and then to get fined later.
I don't think we should be concerned about the dollar going up 1% when it's down exponentially over the last few years. And so No.
Oh, I spend 4 seconds a week thinking about the dollar, but I know you guys are very experienced, and that's why we're a community. So I can ask these
And
questions.
I also believe these short-term price movements in the dollar are just that, short-term. I think we continue our race to the bottom. And something people need to understand about currency is simply because the currency goes up doesn't mean the net value and buying power goes up.
Yeah, that's right. Well,
You're
and
up in the last 3 weeks, your purchasing power went down.
well, and I think the most important part of it is what you just said. The long-term analysis is a race to the bottom, and that's not changing. So portfolio design should reflect that overall long-term opinion.
I get it. I think it's a little foolish after 2 weeks of the dollar going up for JP Morgan to be like, yeah, but the dollar could really, throw some cold water on the commodity markets. It's like, get the hell out of here. That's no.
Yeah. Let's move into stock
Now,
talk here,
Mark,
guys.
if the dollar is at 98, 99, 100 on the index, I have a different opinion.
Well, we're not there yet, right? We'll have that conversation if and when it does happen.
There is a capitulation point where the dollar has a very big impact on exporting and importing. We're not.
I'm just tired of the dollar stealing my not being interesting enough for me to get food at this point.
It's so boring though, bro.
I know, right?
I can't make it. I can't do it. I can't make it. I can't make Forex exciting. It's impossible right now.
Cody coming in from the sidelines.
Cody coming in hot.
He's going to be coming in hot.
Get that mute button off right now. This is.
I could make it exciting because
No.
I've been.
Oh, Cody,
very
you can't.
excited.
Wait a second. Hold on. Let's give him 2 minutes.
Hi, Mark.
Oh, Mark's like inching on his chair, like, wait, is he gonna go?
I'm gonna enjoy this.
He's off.
Honestly, I should just be like, no, Mark, back to you. Just to.
That's
just
not
to mess with it.
exciting.
All right. No. What is exciting is the fact that all the movements that's happened in the U.S. dollar have been very easy setups or momentum plays where the intraday levels have been so easy just to tick up stop losses throughout. I mean, one of the easiest ones was anything.
Listen, Mark achieved what he was trying to achieve here.
He was. And I wasn't going to give it to him, but you said, come on, make it exciting. I was like, all right, I'll
no,
talk.
because you can't. It's impossible. And this wasn't exciting. It's the dollar. Nobody, look at Emily just sitting there going, can we get done with it?
All right, y'all can move on. But me and my
it's just the
traders
dollar.
like the U.S. dollar.
You don't like the U.S. dollar.
Okay, I like trading the U.S. dollar.
Okay.
Of course, biggest currency in the world.
Yeah, biggest currency
liquidity. Yeah. Did you give Mark enough time for a snack? That's the only real debate here. I don't think we did.
Yet.
Mark will bump back.
Listen, I'm working on it. You can go ahead.
That's right. Let's move into stock talk here. I only got a couple of companies with earnings here today. I believe, Matt, that you were ready for and thought were interesting. Stitch Fix and Dick's. I do want to go through those couple of different corporate items, but then I want to talk about the podcast and those portfolios we picked, the draft we had, and then the class that makes cash a little bit later. Let's run through these earnings real quick if we can.
Yeah, let's. I only got 2 of them. I'm gonna do this fairly quickly. Dick's Sporting Goods here comes out, reports EPS numbers of $2.43 versus the expectation of $2.21. They also reported revenue of $3.1 billion versus the expectation of $3.1, 19.8% year-over-year increase in revenue. Guidance was reaffirmed within a very wide range, which was a little weird. It was like 240 to 320 in terms of the range on guidance. But again, pandemic, you got to try to allow people a little bit of leeway to do that type of stuff. Dick's also raises their guidance by 16%, ladies and gentlemen. And the last point is the point where everybody's kind of justifying the sell-off, because I'm taking this actually as a fairly positive earnings. And I know the headlines out there are not positive for Dick's.
Mm-hmm.
Most headlines for Dick's are like, oh, sales stagnation. Oh, Dick's signals that we're contracting and all that. Guys, that's a storyline that played out last quarter. That's not this quarter necessarily. And sometimes when price goes down, we just got to fix it. We just got to fix some type of reason to it, right? Just to make it make sense in our head. But this is a report that is a nothing burger to me, and the price movement to the downside is a nothing burger to me. There's nothing in this report that questions the fundamentals. However, one piece of headwind to maybe keep an eye on, keep a track of, is they are looking at guidance that did get reaffirmed, and people are taking that as a negative here today. Tim, how many times have I reaffirmed guidance through earnings season? all the time.
It happens
All
consistently. Yeah.
all the time. And same store sales last quarter were up 23.2%. Growth this quarter was up 19.9%. These numbers are not that big of concerning numbers, quite frankly. Again, market's going to do whatever the market's going to do, but the numbers for me were perfectly fine. I do not have a problem with the numbers, and they didn't lower guidance. They simply reaffirmed guidance in a wide range, and maybe couple that with what happened last quarter in Dix on an earnings where they did show for the first time during the pandemic a little bit of slowing growth. This adds to that storyline a little bit, but again, in this quarter, you're up a good 25, 22, 23%. Given that, maybe you're selling because of that, but to me, the numbers were fine. I do not have a problem with the numbers. Maybe a little bit of headwind with stagflation, but again, I think that's more broad market based. I've seen that concern elsewhere as well. But again, raw numbers were fine, and I do think the thing that I think caught my eye most was the increasing dividend here. A 16% increasing dividend per quarter is not exactly a small number. And so I really like the increasing dividend for Dix. And again, the numbers technically, sometimes we look at charts technically as a swing trader and we're like, wow, let's overreact to everything. But Dix is a long-term tackle 25 covered call type play. And that's what you're dealing with there. And so the numbers are not going to shake the confidence, in my opinion, of the investor class. The trader class, they're going to go with wherever the wind goes that second of the day. The investor class, their feet is stuck in cement on these types of things, and they're not going to move unless the fundamental analysis changes. And right now, nothing's changed on Dix from a fundamental perspective, in my opinion. Now, the same, and the only reason I'm bringing up this one is because Tim asked me to, is Stitch Fix. And Stitch Fix, Tim likes watching a wreck.
This is a car crash for sure.
I know that now because Tim's like, I'm looking at earnings. I'm like, hey, T, what earnings do you want me to get today? Because Diggs was kind of an obvious one. And Tim's like, get Stitch Fix. I'm like, why do you want me to get Stitch Fix? It got like punched in the face and we don't talk about it ever. He's like, dude, it's down 30%. I'm like, man, bro, like I get it, but like, that's just a car crash, bro. He's like, dude, it's down 30%. And he was getting so giddy about it.
Oh, listen, back in, I remember 2009 and 2010 as a trader, earnings gaps were one of my number one strategies. I was a much more aggressive Vega trader. It was a part of my short-term trading much more at that time.
You do love gaps. You love earnings gaps.
Always have. I have always found them fascinating. I find the pricing fascinating. I find the way that it works fascinating. And Stitch Fix got destroyed here today.
They got destroyed, but it was a weird earnings on Stitch Fix because I've seen these numbers, Tim, get bought up in the same type of stock in this earnings season. Okay, this was not, now they missed, but they did not massively miss here. And so I want to give you some numbers, Mark, because Stitch Fix kind of rolls with the underbelly a little bit, kind of one of those high flyers, right? Okay, so Stitch comes out with 20 cents a share on EPS numbers. The expectation was 22. Revenue came in a little bit light of 504 versus the expectation of 512. Again, a miss, but not a bad miss. Earnings was not a miss. Earnings EPS numbers were actually a slight beat. Revenue increased 11.6% year over year. Here's the kicker. Tim, they slightly lowered guidance. Now,
okay,
I thought Dick's lower guidance was actually a bigger revision to the lower side than Stitch was, given that you know how they do ranges, Tim, like on guidance. Like I think guidance is going to be anywhere from 240 to 320, right?
Correct.
That's a pretty big range on a company like Dick's Sporting Goods. It's a $6 billion retail company. Well, all Dick's did is they lowered it to the lower end of the range a little bit. Stitch had a true lowering of guidance, but it was not as big of a percentage lowering as Dick's here. And so again, a negative report, but 30% down, that doesn't make a lot of sense to me, other than it's just a high flyer earn. kind of wasn't fundamentally strong in the first place.
Sure. I mean, and quite frankly, this price action that's been chewed up by some of these companies that have gone to the downside here recently. Stitch Fix is just a radical example.
Well, I don't have any interest in Stitch Fix itself. The chart's fascinating to me because I think it is another reminder. We have over the last 3 weeks seen price action that we haven't seen in the last year. You really didn't see this, especially in these high flyers. It is a reminder of being aware of when earnings are on companies you're trading. It is a reminder that we can be in a bull market for the next year. Mm-hmm. And I think some normalcy is returning to trading. I think you're going to see downtrends. I think you're going to see big gap downs. And that's if there's a bull market. It's not going to just blindly, everything goes up. I think normal market trading is back. Especially as we get further down the road from stimulus, because these stimulus conversations impacts everything. Like, it doesn't matter what the underlying fundamentals are. It's going to drive market mechanics. But as the market gets back more to the pre-COVID levels, guys, you're going to get back to more of a normal marketplace. And in a normal marketplace, you have great bullish uptrends, and you have great bearish downtrends. And that is a beautiful market to play in.
I agree. Yeah. Normal conditions.
The Bears can actually play, bro.
Yeah.
They can actually.
What's up, guys?
Hey,
what's up, Gino?
Let me see if I can log in here.
No, you're definitely logged in. We hear you.
Hey, Emily. Hey, Mark.
What's up, Gino?
Here we are.
There we go. What's up, buddy?
There we are, buddy.
Just in time, Gino. You can actually play judge and jury with Emily as well.
Let's do that right now. That's perfect timing.
Perfect timing.
We got if Emily's the queen, what would that make Gino?
Gino is the court jester. Right?
Okay.
I am the.
Nah, he's Prince. He's a prince.
No, dude. Me and Gino are jesters. Come on, we're the two clowns vying for laughter. Come on.
Hey, real quickly, I just wanted to mention one thing I like about Tackle is we have a lounge every morning, guys. I don't know if you guys know that. If you're brand new, it's the first thing. Like, what is it? 11 o'clock Eastern, 8 o'clock Pacific, and we had a good one this morning. One of the questions was, how do I trade Bitcoin? So I went through there and traded Riot ETF on it, looked at the Bitcoin futures. We placed a couple practice trades on it, did a really good covered call and naked calls on Riot. Mark, you'd love that one with really high odds. And like 40% return, just so you know. So we recorded that session. It's going to be in the archives. So if you missed it, you can still catch it. Little 10, 15-minute lessons. Mm-hmm. And the reason I taught that, guys, is because a student had a question on it and had to walk them through it to make sure they didn't make a mistake. So if you guys ever have a question on anything, bring it to the lounge. Let's analyze.
Great place for it. Yeah.
Hey, second thing, we also went over the newsletter and bullish percent index. And I gave away my secret, how I nail probably 9 times out of 10, not all the time, sectors every week and daily, how we've been finding the strength. It's a 20-year-old system. It's real easy to learn. You shouldn't be paying thousands of dollars for it like I did. And I share it with everybody. So that was this morning. Those will both be in the archive for the lounge, guys. Phenomenal show. Mm-hmm. Just a little plug.
I love it. And by the way, those lounges are a fantastic place for pro members to come and join and ask questions and have conversations with the coaches, with the team. I love those lounges, Gino. Gino, on the podcast yesterday, actually, Matt and I, we played a little game where Mark had 21 different stocks.
Oh my God.
And we had to draft them like we were two coaches picking our ball teams.
Okay.
One at a time. And episode 415 is up on site. I will drop that link in the chat here shortly as well. And we wanted Coach Emily to kind of play the judge and jury here today. And we're going to have you come and be the helper to her queen, right? You will be the aide to her queen.
As always, Team Tackle judges Team Tackle is the best judges.
And Team Tackle, we want to hear what you guys have to say out there.
Except when they say Tim's portfolio was better than mine. That is a bad response. I kid.
Vote with your conscience.
I kid.
Vote based on the data. Do not be influenced.
Listen, is there a way I can limit the vote count? No, I kid. Now, basically, guys, what we did was, Mark found A couple stocks per sector in the market. We had some utility plays, consumer staples, food-based companies, you know, every sector, tech, comms, you name it.
Mhm.
And we did a little bit of a draft, Tim had 10 picks. Tim went first. We snake draft. And basically, you know, Tim, kind of talk about kind of what your portfolio and what you were trying to build, and then I'll do
Sure.
the same, and then we'll go through the picks.
You know, the very first thing I was thinking about, because the premise here was not short-term trading. It wasn't about the
No.
charts or the setups or the
And it
trends
wasn't the next year, long term.
This was an investment portfolio.
Investment portfolio.
An investment portfolio. So I wanted to have some safety. I wanted to have some dividends. I wanted to have some of the top end of the cream of the crop out of tech and some of the leaders in the market in different space. But I also wanted to have diversity. You know, I think one of the mistakes people have been making over the last couple of years, and we've seen this with the recent moves in energy and industrials and all those kind of stuff, and even Wall Street has done it as well. They were underrepresented in certain industries, and so they failed to take advantage of the uptick in some of these strengthening sectors that we've seen since the economy. Your opening theme has been happening since the election, right? Energy, industrials, financial. So I wanted to make sure I had some good picks in there as well, splash in a little bit of growth, but I went for the big names. Matt, how did you decide what you wanted to pick?
You know, Tim, obviously, you know, whenever you're doing this type of thing, you're looking at the list that Mark provides, right? Because he's the one who picked the two stocks. Obviously, I think for me, everything starts with, okay, what's that foundation? I tackle portfolios like you're building a house, right?
Mm-hmm.
You gotta lay the foundation. You gotta build a plan. You have your blueprint. You build your plan, then you lay your foundation and you execute your plan. And so I think when you're laying that foundation, for me, you got to have a foundational stock that you believe in, that you will not come off of regardless. Like you just believe in that, right? And so for me, there was only really kind of two stocks on the board that kind of met that criteria that Mark selected. That was Apple and Microsoft. And I pretty much knew you were going to take Microsoft 1, and so I was going to take Apple 2. But like Microsoft would have been my pick as well. I would take Microsoft over Apple right now. I would. Last year I would. There's only a couple times I wouldn't take Microsoft over Apple, but Microsoft I think is the 1A play out of that group. And so you build your foundation, and then I think it's a matter of the subjective nature comes into it, Tim. You know, you went with the Verizon pick, and we'll get into there in a second. But you know, I kind of wanted to go innovation, quite frankly. And the reason is very simple. I knew I could get value deeper in the draft, and I wanted to get innovation companies at the top end of the draft, because if I could corner innovation, not having innovation stocks in 2021 is like not having steam engine stocks in 1760. Like what are we doing here, guys? You're starting an evolution from a market cycle perspective that we're all going to look back in 100 years saying, oh man, technology changed. Like you got to have innovation in portfolio. And so I wanted to go innovation, and there's not a company better than Tesla that fits the innovation argument. It represents literally the entire innovation type movement out there. And so I wanted innovation, and then I got my I got the foundational pick in round 1. I got my innovation pick in round 2, and then I just tried to, you know, honestly round out the best portfolio is what I tried to do. And so and that was kind of my intention. We have a lot of good games. Like we have a lot of games on the pod, but what I like about those games is really kind of the thought process that you go through when you're making that pick, and the discussion of how that fits that portfolio. So with that said, definitely check out the pod later on. Here is the portfolios. Now, Mark, you're the one who set this game up. You're the one who found these stocks. Was there did you just pick two names you picked from the sectors? How'd you go about picking the stocks?
And I went through, I broke them because they're all S&P 500 stocks, and you know, obviously had 500. I thought I would pick a section that represented a good cross section of really good companies that had a lot of diversity when you looked at them as a collective whole. And so I think put together a pretty good list for you guys to choose from. A lot of recognizable names.
Survivors or innovators?
You know, so, well, I mean, it's just more of like things that you actually would want to own
Okay.
for 20, 30, 40 years, right?
Okay.
Forever.
Survivors. Yeah.
Long term. So here's the other caveat of the rule. We couldn't go off the list. So there were 21 companies. We picked from that list of companies, and these are all classy blue chip top end names in their industry sector. And we started picking. I did pick Microsoft 1A.
Yeah.
And I think the first discussion that anybody would have had is, do you prefer Microsoft over Apple, right? I went with Microsoft for several different reasons. I was really debating it. I didn't feel like I could make a wrong choice there. Matt, you used the word foundation. That is that foundational play that you always want to start a portfolio with. So I went with Microsoft. Matt went with Apple.
And quite frankly, like I said, I think all of us, well, not all of us, but you and me would have went with Microsoft. I don't get me wrong, I love Apple, but Apple is very consumer driven. Microsoft, not necessarily as much. It does a lot. It does more on the corporate side than say Apple does. But again, you're talking about the best consumer product versus the best all-around product. It's like, okay, do you want the best home run hitter or do you want the best utility player? And who do you like? Who's better, Barry Bonds or Pete Rose?
Sure.
Yes, I just picked two people that are highly controversial in baseball.
But also
that's a bad analogy. And
but how about let's throw Roger Clemens and
Mark McGuire
and shoeless Joe Jackson in there too.
Yeah, Sammy Sosa and shoeless Joe Jackson. Oh my goodness, Ty Cobb. How about Ty Cobb and shoeless Joe Jackson? Let's try that one. So Tim, you went with Microsoft. You wrapped it around with the safety dividend play with Verizon. You stole, and I mean that, stole Disney from me, and I'm still upset about it.
Dude.
Goldman Sachs obviously was back to back with you and me, Bank of America versus Goldman.
That was interesting though, because you chose first there, and I would have been happy with either of the financials, and you chose Bank of America.
I thought I had a wraparound.
Mm-hmm.
I thought I had a wraparound.
Oh,
I thought I had Walmart, Disney back to back. You know how we switched up the snake draft to the first round and we made a mistake? I thought I had the wraparound. I was going to go Walmart, Disney. But no, I went Walmart, and then I made the mistake that thought I had the wraparound. I didn't. You went Disney. I love that Disney pick. I think you got real good value. I don't know what you're doing drafting Verizon in the second round.
That's the big critique, by the way, so far. Matt does not like my Verizon second.
I hate it. I absolutely hate it. I thought Verizon would have went there with Pfizer, quite frankly. I did not like it. I love the Disney pick, though, in the third round. I love that Disney pick. Goldman versus Bank of America, it's just a matter, do you want more growth or do you want more covered calls, right? I wanted more covered calls there. I think Bank of America is one of the better covered call, stocks out there in the market. I got Newmont in the 7th. You took FCX in the 5th. I think those are, I wouldn't say they're 6s, because I think most people would say FCX is slightly better than Newmont, but I think you just want a commodity in your portfolio, and you took FCX first. I knew once you took FCX, I knew I could wait a little bit. I wanted to get my industrial pick fairly quickly. That was Caterpillar. You waited with Union Pacific. You got your energy play CVX. I got Valero. But honestly, Tim, I like them both, Valero and CVX. But I do like Valero more over the next 10 years than I do CVX, 100%. And I think you do too. And here's why. CVX is tied to oil far more than Valero is. And neither one of us have an upward projection on the price of oil from a decade of the 2000s to the 2020s. And so I do think Valero is a better play than CVX over the next 10 decades, but that's subjective. I took the REIT. There was only one REIT on the board. It was an industrial REIT in PLD. I took that. You took Johnson & Johnson. I wrapped up with Pfizer. Tim wraps it up with his industrial play in Union Pacific. Tim, correct me if I'm wrong here, but I would say you went more Warren Buffett style.
Yeah, I was gonna say he's more conservative here.
Yeah, I went. I got my value with Pfizer. I got my energy play in Valero. I got my industrial plays for the infrastructure and all that jazz. But I truly did want innovation. I think it's a mistake to not have innovation over the next decade. And there's only two companies there that you would consider disruptive innovation, and that's Tesla and Netflix.
And you got them both. You definitely
got
got the
them both.
innovation side of it. There's no question. Mine's more of that conservative side of it. And you had a blend. You had a blended portfolio. You've got a
Tim,
lot
what
of
were you
conservative
looking at?
too.
Were you looking? What was your thesis or your primary indicator? Was
I
it
think I threw a wrench into the entire thing when I picked Tesla too, and Tim wasn't ready for that.
Yeah, Tesla was going to be one I wanted to target and get.
Tim thought he could get Tesla 4
When
or
I
5.
didn't get Tesla, I had to snake Disney from him. So at least I got
Yeah.
that one out of his.
That was a revenge pick.
Pried it out of his hands. I love Goldman Sachs. I believe out of the two financials, I prefer Goldman there.
You got your pick there. I picked Bank of America first, but
Yeah.
I was not
still got-
picking Goldman
What made you pick it? What was your thesis?
because he likes the devil.
Because Goldman Sachs is the trading firm, and I believe market volatility is here forever, in terms of just short bursts and all that kind of stuff. We know these trading firms can make money in volatile markets.
Are
as
you
prices
using
go up and
one
down.
particular indicator or one particular reason, or is it just
On Goldman or on the whole
on
portfolio?
everything? Like, do you look at a fundamental? Do you look at just what you know in the past? Are you looking at the
Oh, Gino, I
business
know all
plan?
these companies. Yeah, 100%. So, I mean, we're not talking about companies that we don't track or trade like every
Yeah.
single day. So
I mean,
really
'cause
what
honestly, you know what impresses me about this whole thing
Mhm.
is both of these portfolios blow away anything my money manager I used to have.
Oh no!
I
Listen,
mean, both of them, honestly. I mean, these
it's
blow
not
away most
hard to
401ks
create
are-
an index, guys. That's all a portfolio is the creation of your personal
gosh.
index. Like, I think you guys are better than the S&P is at putting an index together.
Mhm. We got a lot of opinions coming in the chat. We'll get team tackles here in a minute though, but I do.
Again, I like both, and yours is a Warren Buffett value-based portfolio. I mean, the Verizon, you solidified that when you picked Verizon number 2.
Yeah, right.
Right.
Second pick.
And
Second
I solidified the growth side of mine when I picked Tesla number 2. So it really is how you see the next 10 years. I think you need innovation over the next 10 years, but I think Buffett did perfectly fine without innovation and disruptive technology over the last 20 years.
Well, can I,
And so it's just a matter how you want to go about it.
I'm looking at Tim's as a good dividend covered call portfolio
Very.
and slight growth. And I'm looking at yours, Matt, as a good trading portfolio and a small dividend. But yeah, I mean, they're solid. They're solid, right? I mean, if you can make an ETF out of both these, I'd be in.
So you got to pick, Emily, based on what you're looking at.
I got to pick one.
Based on what you're
Well,
seeing.
okay, let me make it simple for everybody. Would you pick the Tackle 25 or would you pick Dividend Fireworks?
Don't try to frame their thing.
Okay, let Emily go
Stop.
I'm not, hold on. Wait a second. I'm not framing anything. But am I not right? Didn't Gino just say you're more of the value dividend paying? That's
it's a
dividend
fair-
fireworks, bro.
It's
And
a
didn't,
fair point.
thank you. Then it's not framing.
What would have been a better game was if you didn't put the names on who picked what and us have to guess who picked which portfolio.
Y'all would have had it wrong, by the
Yeah,
way.
exactly. Knowing
Yeah.
Matt's personality and knowing Tim's personality, I would have thought Tim would have had Matt's list and Matt would have had Tim's list. So that's
Yeah, that I should have done that, Em, because I thought the same thing. But no,
I want to see Mark's.
it's amazing how you assume about people, right?
Right,
Those
it
assumptions you make about people.
because you're very
Yeah.
fundamentally driven. So I really would have thought that, everything on Tim's list would have been you and Tim vice versa. So
And Matt's is based off the Fibonacci here on all these.
I'm not certain Fibonacci played a role in my analysis yesterday.
I don't think it did.
It could have. We were in a podcast. I was certainly visualizing some Fibonacci's on trends, but
GameStop in there. What, nobody had GameStop in there?
hey, I don't know. Gino asking me if I used Fibonacci in my podcast analysis or my mother waving to us through a podcast. I don't know which one is like that was funny last night. Yeah, our mom did stop by the podcast yesterday, by the way.
Emily, are you having some anxiety picking?
I am. I
Okay.
am.
Okay. Is there questions here?
God.
No, there are no questions. They're both great lists. And I mean, I guess it's just really depending on the individual and how you see the next, 5-10 years panning out,
Emily, if you don't pick Matt, we're gonna have to listen to him filibuster another hour. So
This is true. This is true. Yes.
Tim was my mentor, so he knows what's
Tim is by far The worst
No,
filibuster of all of us.
The one that has Netflix is already a winner for me. So I have to go with Matt's portfolio.
Yeah.
I mean, you've got
The queen, she chooses right.
Listen, it has Bank of America and Netflix. Of course, the Queen is
She's not going against Bank of America.
portfolio.
She's not going against Bank of America. If you said a bad word about Bank of America, Emily would fly out just to give you a tongue lashing.
Gino, if you had to pick one.
Well, here's the honest truth, because I've traded pretty much all these on a regular basis, because you got some big names here that are easy to trade, optionable, shortable, very liquid stocks. I've done option trades on pretty much all these at least once or 100 times. I can't go a week without trading Microsoft. I can't go a month without trading Apple. I look down this list. As far as me for a cash flow trader, I have traded Tim's portfolio much more as a cash flow trader. But as a swing trader, guys, I love Matt's list because I take those when they set up. I really do. I go more blindly into Tim's list. They're a little bit more conservative. You know, I don't need a perfect setup there. But
Well, honestly though, Gino,
setup on Tesla. I need a good setup on Netflix.
that's fine. But honestly, I would not have picked Tesla too if this was 2 months ago with Tesla at $900.
I know.
Tesla's had a massive correction, and that absolutely played a role in my thinking that you can get a company that's a massively high flyer at a steep discount in price. And I'm sorry, I still think it can go down lower, but I had to make a decision yesterday over the next 10, 20 years. And I absolutely I fundamentally think it is a mistake not to have innovation companies in your portfolio.
Oh, absolutely.
And when you only have two, Netflix versus Tesla, I'm sorry, I think Tim's portfolio is too conservative.
That's an interesting thought. And I did want to ask you a question, Matt. You know how like at Christmas, you play that game where you get the gift and somebody can steal the gift, the little white elephant thing. If you could steal one stock off my list of 10.
Oh, I love this game.
If you could take one stock and you're like, okay, I didn't get it. I need it. I got to put it, make my number 11.
We know which one that is.
You don't lose one. You don't lose one. You just add one.
Well, okay. If I can take any, I'm taking Microsoft.
Can't take Microsoft.
Amazon's not on there?
Throw that wrench in there.
Yeah, you can't take your first pick.
Okay.
all right.
It would be Disney.
Not Verizon.
Tim, here's the thing. You could have got Verizon with the 21st pick. I wasn't picking it. There's not a chance in the world. I can get a 4.5% dividend in any company that wants to go stagnant for the next 10 years. I'm fine with that. So
you would take Disney. You would add.
Yeah, I would take
Absolutely.
Disney.
I would take Tesla.
Yeah.
Because I believe in portfolio design. You do want to have that
But
one upside
Tim,
shot.
I would not trade you my Tesla for your Disney because of the importance of Tesla's innovation to this portfolio design.
I could probably get a Netflix. Now we're not starting.
You could trade a Netflix.
Yeah, I could get a Netflix.
Okay. This is how fantasy football trade works out. I will trade you Netflix right now for your Disney. Market cap, you're getting a bigger company. That's number one. Number two, you're also getting a company that fits a massive need. You didn't draft any wide receivers, bro. You need to get a wide receiver on your team. Netflix
I feel like I'm in the audience of Deal or No Deal. Bad deal. Don't do it.
No deal on Disney. No deal on Disney.
You know,
I'm keeping Disney.
I think you guys should have a dozen stocks on there. And then,
I'm sorry. I think you do not beat the S&P then if you maintain this portfolio.
I want that Tesla. I want that
Exactly.
Tesla for Disney.
You should do a
You're
dozen
not
stocks.
getting Tesla. If you're going to get a Tesla, you got to throw a Disney plus. You got to sprinkle a little bit of. Give me some FCX, bro.
You still got the upside in Netflix, but then you get your Disney pick. I mean,
Yeah,
I think
Tesla represents the entire movement.
Here's what Team Tackle's saying. Swin, at first cursory glance, I vote for Tim. Issachar, I'd take Tim's list as well. James, I'd go with Matt's without Bank of America. He thinks Verizon is also trash. So there you go.
I don't understand what you guys are looking at. He picked Verizon instead of Tesla.
Yeah.
He has zero innovation in his portfolio in a world that is all innovation.
Here's another one.
Every company is trying to achieve.
Come on,
and there's none of it.
Here's another one. Tesla alone will outperform all of Tim's list.
I agree with that. except Microsoft and FCX.
Okay, so
Jonathan,
Matt, I got a question.
Hold on,
I
Jim.
got-
Let me get a couple more of these out. On a boring cover call portfolio, I go with Tim. That's from Jonathan.
I agree with that.
Yes.
Yeah.
I agree with that. Dividend, right cover calls, not worry about things. I agree with that.
Tim's list is great if you're 80 years old.
Hey, it'll stand the test of time, right? You'll make it.
Oh, dude, we said Buffett. Maybe he went Charlie Munger. Maybe Tim went Charlie Munger.
Okay, so I got a perfect way to solve this.
All right. So what do we got? What do we got?
I got
Split.
a perfect way. Perfect way.
Split?
Matt,
All right, Gino. Gino hasn't picked yet.
I say, Matt, if you were to fix Tim's portfolio and you could only give him 2 stocks, which 2 would you give him to add to his and make an even dozen?
He needs innovation.
So
He
Tesla
made a
and Netflix?
mistake picking Verizon. It was a massive mistake.
So if you
Why
give
in the
Tesla
world would you
and-
pick Verizon when you can throw a dart at the market and find a Verizon and not pick innovation? I'm sorry. It values everywhere. You can find
So-
dividend anywhere. He's getting great dividends out of CVX. He's getting it out of Johnson and Johnson, UNP. He's getting it out of Microsoft. He's getting it out of Disney. He didn't need that at number 2, which means he needs innovation.
Uh-huh.
And so if I'm making a change, I'm kicking his second pick, not his 10th pick. I'm kicking Verizon completely out of his portfolio, and I'm adding any innovation. And probably, I mean, honestly, I'd probably just find an innovation ETF. But honestly,
Tesla or Netflix or
ARK, like just go with the ARK fund, right?
I think
but he needs
Tim, if you
innovation.
had Amazon in there, you'd be fine.
That's disruptive innovation is a thing, guys.
Yeah.
It is. It is a
Okay, so-
massive movement, and there is none of that here. And so I would say he needs more of that.
If you gave him 2, it doesn't have to be from this list. If you just added 2.
Okay.
Hold on, I'm getting some trash talk over here. Craig Delk says Tim's list seems like a deflated football. # no inflation. Oh, touche, Craig.
Oh, hey, that deflated
done,
football
Craig.
won the Super Bowl.
Hey, Tom Brady, no Tom Brady jokes today. Actually, Tom Brady jokes every day. I just think you need innovation here. And so I would say remove Verizon. And honestly, I don't know. I'm looking at it and I'm saying it's a pretty, like Disney and Microsoft is a really good foundation, like a really, really good foundation. FCX, I mean, you'll split, you'll have a lot of opinions between FCX having the copper kicker versus those gold stocks like Barrick and Newmont Mining. I personally prefer the gold kicker over the next 10 years, but I'm not going to argue with somebody that prefers the copper kicker over the next 10 years.
Wow.
So I do think those are split. I'm not sold on Starbucks over the next 10 years, quite frankly, but I don't know. You only got one energy play. I honestly, I just think there was I don't think there was 2 mistakes in this portfolio. Honestly, I think it was just Verizon.
Breaking news: Disney Plus has more than 100 million global subscribers.
Dude, the war is Disney versus Amazon, and we don't know who the winner is.
I know.
yet.
I wanted Amazon. I would have picked
Like,
Amazon
yeah.
too.
But I would say Tim's portfolio is a really, really, really good portfolio. If you remove either a Johnson and Johnson, a Verizon, one of those 2 components, and you add one of the innovations, right? And so we didn't have like semiconductors to pick from. Obviously,
No.
we both need a semiconductor here.
There's a lot
But
we can add, but I mean,
yeah, but out of mine, I would say, a Netflix or a Tesla fixes that hole Tim's missing pretty good. And it's a small hole, but it's an important hole, I would say.
I think the chat is leaning towards Matt, is what I'm.
It's close though, right?
It's close. It's
close.
really close.
Yeah, I mean, yours is like I said, the Microsoft, Disney, Goldman, FCX. I mean, those are some pretty good.
And let me guess, all the trash
Yeah.
talkers are voting for Matt and all of the
Because
quiet
I have
ones are voting
Tesla.
for Tim.
Yeah. All the good people are voting for Tim. Yes. Yeah.
Poor Verizon.
All the trash talkers out there supporting Matt. Oh yeah, and yet I'm the one framing the conversation, Mark.
There's not a lot of to the mooners on Tim's side.
that's
If I could add Bitcoin, I think it'd be good. So,
Yeah, there it is.
Dude, all you got to do is get Verizon to start accepting Bitcoin, bro.
that's true. That could,
Hey.
absolutely maybe that.
And then, bro, guess what? At that point, then you'd be, yeah, but Verizon's my innovation company. Yo.
Hold on, I got to do a little math here. Carry the 7 multiplied by
No,
6.
stop.
Verizon's
stop.
up 100% in the last 10 years alone. Pays a 4.5% dividend.
The market's up 450%. Stop.
All right.
Stop. You underperformed by 75%, Verizon. Get better.
Right.
It's amazing what a headline actually means to somebody without knowledge versus somebody with knowledge.
Fair enough. There's an easy comeback on that. It did underperform the S&P.
Yeah.
All right. Mark, you didn't pick. You didn't pick yesterday. You didn't pick today.
Come on, Mark. You got some time.
I know Mark's gonna pick.
I'm just not, dude. I don't get involved in family squabbles.
Create family squabbles. What are you?
I
talking
create
about?
families. There's a difference.
Creates them. He creates them and just stands back and laughs.
Either way,
You are literal the devil. You literally create them and then come in and sprinkle your hate on them just to see how big they get. You talk about you live for
I don't
these
exacerbate
moments.
them. I just set the fire. I don't put gas
Oh
on
my
them.
God.
I know, and then you sit back in your dark shadows chuckling.
Basically, yes.
Either way, by the way, guys, we had a lot of fun talking
Oh,
about this
it
on the
is a lot of
podcast
fun.
yesterday. And if you want to go and hear our thoughts as we were selecting these stocks one at a time, make sure that you do listen to that podcast. And by the way, Matt spent some time in the middle of the show during our feature presentation talking about the tools of the Federal Reserve. And if you want to learn more about the Fed, things like repo actions or Operation Twist, some of the context around what they do to execute their mandate, go and listen to that podcast yesterday. Emily, fun show as always. Thank you for being here. Let's start moving into final thoughts here. Em, I'm going to go to you first. You're our guest here today. What are your final thoughts?
Final thoughts is that I will do my what do we call my segment? We'll do it tomorrow.
Yeah.
What do we call my segment?
Class.
We have
makes
not
cash.
just
Trash.
we need a new name.
But I will tell you, I did have Goldman Sachs as one of my picks. So Tim, there goes my little bit of leaning towards your side today.
How about the Queen's Court? Something around the Queen.
The Queen's Gambit.
I love the Queen's Court.
Is Queen's Gambit? Is that taken?
Yeah, that was taken.
That was
they won
taken.
Grammys or
I like the
Emmys
Queen's
or
Court though,
whatever
where
they
you
Grammys?
bring your
are. Not
trades.
Grammys?
No.
You didn't catch that, Mark?
Listen, I like the Queen's Court where you bring your trades to the Queen. That would be
Ooh, and the Queen judges you
the
harshly.
Queen's Court.
Oh,
That's
and
a good segment in the making.
Segment.
I like it. That'd be fun.
I'm not playing that
If
segment.
you don't like it, you say off with their head.
That's right.
About that in the
Exactly.
pre-production.
She did say that in the pre-production. I like the Queen's Court where she judges us harshly. I do like that.
I think it'd be great. Gino.
But final thoughts are, hey, it's Tuesday. We've got a nice move in the market today. Find those great setups. Again with tech getting that nice bounce today. We've got identified support and resistance levels. If you're feeling tech-ish, go right ahead. But have those stop losses and everything else tight in case we do have that little bit of a fake out. But it's what do we always say? It's a stock picker's market. So find your trades accordingly.
Absolutely. I love it. Gino, final thoughts from you, sir.
Yeah, she just said the key word, stock pickers market. What does that mean? I did a big article on the newsletter this last weekend. Go look it up. It's posted at tackletrading.com on what a stock pickers market really means. And I actually showed you how easy it is to find a stock as a stock picker. You don't have to have a degree in college. We teach you how to do that. And I'll tell you, man, it's easy. This has been fun trading and picking the sectors. I do like what I just learned today by you guys showing how easy it is to build a portfolio. They're both better than most portfolios I've read. I've read hundreds and hundreds of portfolios from students and looking at their 401ks. And guys, it's a mess when you look at the thousands of stocks and ignorance these people have building portfolios. So you beat 90% of the people out there, what I just saw just now. I enjoy it. So this is great education, guys. This is what it's all about. I'm having a fun week trading. Join us at the lounge. Join us at the shows because we're staying on top of this and a lot to learn.
Love it.
Yeah, and Tim, I hope people do listen to the podcast and the game because again, I like those types of games because you actually analyze and you start thinking and you're designing. And I was over here, you know how I love drawing circles for portfolios and pie charts and all that jazz. And but what I loved about it is just listening to Tim's thought process as he was making his selections, and talking about, hey, I need an industrial play. I don't have an industrial play. I already have a material play. I don't need Newmont Mining. I already have FCX to do what Newmont does, right? So I don't need that. So even though that might be a better company, I need this in my portfolio. And I love those conversations. So I hope people listened to the podcast yesterday throughout the end, because I did enjoy that draft we did yesterday.
That's cool.
But in the feature yesterday, I also talked about the tools that the Fed does have at their disposal. And a lot of times, everything that the Fed does, and you guys can listen to the podcast, is always about the Fed fund rate. It is always about the Fed fund rate. And the Fed fund rate is not changed very often. It really doesn't move very much. The Fed does not adjust that overnight rate very often. They've only done it 3 times in the last decade, for example. But the Fed does policies to shift the Fed fund rate in the bond market when certain things transpire. For example, right now, the short-term interest rate is steepening against the long-term. And in that environment, there's a reason why the market is talking about, is the Fed going to use Operation Twist, which is a very well-known Fed tool to adjust that short-term interest rate lower and get it more in line with their long-term projections. Or typically when the interest rates start contracting and the yield curve gets too flat, what they do to steepen it is called reverse repo actions. And so a lot of these tools can be very confusing for an individual who is not familiar with the Fed. And so what I wanted to do is just talk about what these tools are, why the Fed uses them, and why the market is overreacting a little bit in the short term to why the Fed's not using these tools, because that's what truly did transpire last week. The market wanted to hear Operation Twist. The market did not hear Operation Twist. And so it put a little bit of confusion out there, because that's what they typically do when the yield curve steepens like it is right now. And so I just wanted to take some time to do my little definitional type stuff that Mark talks about on the Fed tools, and making sure that our community truly does understand what these tools are and why the Fed uses them.
I thought it was very, very, informational. I thought it was educational. I believe everybody out there, if you listen to it, you're going to get something from that conversation for sure. So definitely check out the podcast. I dropped the link in the chat. You can find it on any podcasting app as well.
I like to simplify the Fed. I like to make.
I would like them to simplify themselves as well. That would be.
Well,
fantastic.
Unfortunately, we can't fire Powell.
His term's up next year. We'll see what happens.
I'm just saying, when a corporation fires people, the price goes up. Let's just test it at the Fed.
I get no problem with that.
That's all I'm saying.
Mark, any final thoughts from you, sir?
Listen, just be careful. I mean, we talked about those technical levels right now, that it's a battle. Getting some confirmation. Like, I am not as nervous as I have been the last week, but I also know you never know when fireworks. And yeah, listen, and we're all focused on the 10-year. Who knows what's coming down the pipeline? But what I do know is that that technical level is a big, 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 big deal. If we can clear it, solidify upward movement, I'll start adding more risk again.
Yeah, I think that's a fair thing. And by the way, if you're just joining the show now, go back to the first 20 minutes and watch where Matt and Mark talk about the intraday technicals. I thought that was very, very constructive and helpful to know what's going on with the NASDAQ across these different areas of the market.
And one last thing. If this hasn't taught you not to abuse margin and to be careful and all of that, this last couple of weeks, I don't know what will, right?
Mark, we all had to learn that lesson one time.
Yeah, I mean, just make money. There's plenty of money to be made without being greedy and exuberant.
You're not allowed to learn that lesson 2 times.
Well, the second time is,
second time you're out.
Once, fool me once, shame on you.
So fix it the first time.
Yeah, fix it. That's right. That's right. All right, guys, that's our show here for today. We'll be back tomorrow, same time, same station. As always, whenever the markets are live, we go live. If you've not done it yet and you're new to the channel, click subscribe, click the bell, and pro membership. We always have a 15-day trial to the pro membership at Tackle Trading, where you can attend the courses and the webinars like Gino's talking about with the Traders Lounge. Tonight we have a coaches show, 8:30 p.m. Eastern. We have a full calendar.
Who's on that
events
show
on our
tonight?
Page. Yeah, Mark
anybody?
who is on the show tonight?
Greg Holmes and Tyler Craig tonight.
All right.
Oh, I like that tag team.
Old Money and the Architect. I'm sure it'll be a fantastic
Hey, and
show.
Gino,
Yes.
can you make Trade Masters tomorrow?
No, I cannot. I will be.
I want to get Gino on there.
Yeah,
he
I
tried
will be out.
July mind trick
Dude.
there.
I
Gino,
tried to get him
I
in
will.
public to commit.
listen, Gino might, once Gino shows up, he might be there for like 12 straight weeks.
I know,
it's
right?
a
Like-
commitment, man.
Listen, I've seen Gino do his picks.
Yeah, it's
Oh.
scary.
Well,
Yeah.
and what
Kind of.
what I'm excited about, and one of the things I love Gino, and I watch most of the recordings Gino does, and he's doing Cash Flow Club this week, Thursday night, 8:30 Eastern, is Gino will bring strategies that I almost never do, right? He'll be
Yeah.
like, all
You
right,
see
we're gonna do
things
this
you don't.
butterfly and this and that. I'm like, oh, that's just cheap risk. Gino loves cheap risk.
Yeah.
And, I got
Gino
enough
will bring some
risk.
double diagonal debit con on earnings, and Mark will be like,
Hey.
I don't know what you just said, but I really like it. Gino,
yeah.
you win.
Yeah, I got enough risk in my portfolio. I wouldn't mind some cheap risk. And Gino always
Yeah.
brings that. Check
He's-
him out on
he
Cash
is-
Flow Club
he
this
is-
Low
Thursday.
risk.
Listen, Gino is the master at
Low risk.
random, weird, low risk option strategies, and
I
they
know.
are so
I
beautiful.
know.
So
I know.
beautiful. It's got a genius mind.
Yeah, I'm the guy shopping for a real expensive product at the dollar store.
And I love it. I love everything about what you just said. Like,
So fun.
it's so,
fun.
so
For fine wine at the dollar store.
There you go. All right, guys, that is our show. We're going to wrap it right now. Join us for the coaches show tonight. Join us for the other shows tomorrow. Halftime report will be live same time. And yes, Trade Masters tomorrow night. We're out for now. Have a wonderful day.